Okay, now it is streaming. Okay, so tonight we're going to look at the QuickBooks Online again, and I'm going to be looking at progress invoicing. I'll just do a quick overview of what we covered so far, just so that, if any person is following us afterwards or by the video, they will be able to see like what was covered before. So let me just go ahead now and share that screen. So you should be able to see now on my screen. So we look at implementing progress with invoicing. And before you didn't miss much. It was just two topics we covered. So the first one we looked at was sub customers, looking at sub customers and how they lay out. And I know you were here, Vanessa. And then the second thing we looked at was projects, how to set up a project, how to use the project in terms of adjusting the projects, and then how to use it, see reports using the project, which is covered in the previous video. And I'm going to make that available. And that was made available to you in the Google Classroom. But once I get everything set up again, I'm still finalizing the website. Soon you'll be able to go over to the website as well and see the course and training laid out there as well for you so you can follow. So today we're going to look at the progress invoicing, implementing progress invoicing. So you're familiar with this progress invoicing. I know that is something that you may have heard about before. Have you?
I think at work we call it interim billing.
Interim billing. Yeah. So that the person can get in, use the interim billing so that you'll be able to access it. Yes. So there's the interim billing. But and is used for, if you work on a project, especially in construction, is a popular one. But if you're doing a project for someone and it has different stages, you can use and implement progress invoicing for that kind of workflow. So within QuickBooks Online, the workflow of progress billing is really to provide a streamlined workflow, estimate are turned into invoices either by line item or percentages. So you can either create an invoice using line items, or you can use an invoice, or you can invoice the person in progress billing as percentage. So you want to charge them 50% of the cost up front. You send the person an estimate or a pro forma invoice, and now they said yes, they agree to the job. So now you're going to send them the invoice, and in the invoice you can either select by line item or you can use percentages. So to estimate, the estimate itself then tracks completion so that you can always monitor the job income status. This devoted with the project feature, giving a dashboard to monitor all active jobs in one place. So you'll see that from the jobs. The project feature allows you to monitor the job from monitor the income and expenses. So what it does is that this is an additional tool that you will use. So in terms of an overview of the task, so we're going to actually be looking at how to create a progress invoice. We're going to look at the next thing will be how it will be adjusting progress invoices and reporting on progress invoices. So clients often use estimates to generate and send invoices, but may prefer invoicing at delivery points or regular intervals. So this requires tracking the invoice portion of the total estimate. Progress invoicing enables clients to create multiple invoices from an estimate recognize income throughout the project, and track the progress of the project. This helps to manage the client cash flow, ensuring timely bill payments. And also, you can see that this feature is also only available under the QuickBooks plan or with the project feature in Plus or so this feature can be used standalone in all QuickBooks plans. So you can use it in all QuickBooks plans, and then it comes with project features in Plus and Advanced. I think that I saw that someone joined. Oh, you had asked a question?
No, I didn't ask a question. I'm listening.
Oh, okay. All right. So during the course, I will put up some images as well, but you can see my screen.
Yeah, I can see the screen.
Okay, good. So then, as I said, the first thing we'll look at then is the progress invoicing. So under progress invoicing, we have it has the benefit for clients and their customer. It can benefits is it gives like a seamless transition from estimates to progress invoicing and helps make communication with a customer clear. And this makes it easier for customers to monitor the progress of their project. So the customer can have their estimate in front of them and then the progress invoicing. So then they'll be able to see the two together as they work out, right? So in terms of looking at the estimate now, I may have to sign in again. Because I think that is why I'm not seeing something. So just give me a minute, I will sign in. It was there so long that I like it timed out. All right, so when you get your QuickBooks Online and stuff set up and you sign in, you'll be able to go into this. I think I might have to do a session with you and Stefan in probably January, February to go over the basic certification so that you guys can move forward to the advanced, right?
Okay, no problem. But well, when
Yeah,
we are off from next week, I had a plan to go through the videos again for the basic one and see if I could familiarize myself with the work.
but the good thing about this US version is that it gives you notes, especially a good set of notes. So unlike the other one that only gives you videos, I I'm going to have to get some of my students who want to do the advanced for sure to don't sit the test underneath the other using the other version. But we'll see. I think that okay. All right. So I think that Stefan is joining us now. I think she was the person who was sending you had sent me a message, Stefan.
You mean earlier today?
Oh, just now before
Yes.
you came in the class? No. Okay.
Oh,
Okay. So it looks like it's taking me to the as I said, the overview now for the projects. But as I said, in terms of projects, it allows you in terms of this is the task that we had to do, which was converting an existing customer into a sub customer, and then I will share with you some information to do the review. So in terms of doing the question and stuff, we did the question. So, and then just as a close off, in terms of advise clients when projects are suitable, we understanding what your client wants to achieve and tracking jobs profitability will inform your your advice to them on whether they should use some customers or projects for this. The other thing is project details are organized into 5 tabs. The first is the overview. Here you can immediately view the profitability of a project shown as income minus cost, and the section under the income and cost value give a more detailed breakdown of how each total is calculated. And then it allows you to do labor tracking. So projects enable linking hourly labor costs, payroll expenses, and for hourly costs, clients must use basic time tracking in QuickBooks Time, or an integrated third-party app. In QuickBooks Payroll, actual earnings and tax costs appear in the project center after paychecks are created. So this is just telling you that once you're using QuickBooks Time on QuickBooks Payroll, that information is pulled into the project section as well in QuickBooks, so you don't have any problems with going ahead and using it. So the next thing that we had looked at was the invoice, implementing progress invoicing, which we started today. And I know you're familiar with progress invoicing, Stefan.
Not that I can recall.
Pardon me? Oh, is progress invoicing is just our interim invoices. Like if you create an estimate for someone, then you could send them, like bill them part of the cost for the estimate. So we're gonna look at that. The client will send an estimate to a customer and they accept it. Your client plans to complete the work over the course of 3 months, and they want to get paid as they work through the job. So progress invoicing is perfect scenario for this case. Adjusting progress invoices. So by its very nature, progress invoicing happens over a period of time. So in that time, job requirements can change, and so you can go back and adjust aspects of act to accurately reflect the goods or the services being delivered. So for us as bookkeepers, we can use progress invoicing. So we send a person a bill for, say, 5,000. Just come to mind, 5,000, and you want to work. This is over 3 months or a 4 month period. So you could bill the person 1,000 each month or 1,000, and then at the end, once they're happy with everything, then you could send them the final bill. So what it does is allow you, after sending the estimate, you could convert the estimate now into a invoice, and then the person, you can bill the person 1,000 from the estimated cost, so that they will have see that what is left in the billing, and you could also see what's left in the billing, so that there's no confusion in how much the person owes you for the work. And as this note said earlier, adjusting progress invoice. So sometimes the job requirement may change. So in those cases, you could go back and adjust the estimate after discussing with the client, obviously. The estimate either has to increase or decrease, and then you can make the change in the estimate. We submit the estimate to the customer, but the progress billing will already be there. So it will just adjust by the amount if there's an increase or a decrease in the estimate, and then the balance will be there for both you and the client to see. Everyone follows?
Yeah.
And
Yeah,
then
follow.
there's reporting on progress invoicing. So reporting on progress invoicing is keeping track of how much of an estimate has been billed at different stages. Is straightforward using the estimates and progress invoicing summary by customer report. So there's an actual report that we could pull up called the estimates and progress invoicing report. And this is what you will use. Okay? So the first thing is to create a progress invoice now. So progress invoicing has benefits for clients. Hold one moment, please. Alright, sorry about that. I'm back. So when we look at creating a progress invoice, everyone can hear me, right? When we go to do the progress invoice, the first thing we need to do is check and make sure that it's set up and it's on. So the first step is to start by turning on the progress invoice feature in QuickBooks. To do this, go to the general settings here and select accounts and settings. So you go into the gear icon, go to sales, select Sales tab, and then expand Progress Invoicing. Switch on Create Multiple Partial Invoices for a single estimate, and select Save. So once that is on, you move to the next step, which is you can go ahead and create an estimate. So Progress Invoice has benefits for clients and their customers, and that I have said that before. So the next step is to when a customer accepts an estimate, its status can be changed to accepted and it can be converted to an invoice. So with these orders here, like what we have in credit design and landscaping, we can convert, just click here to convert an estimate to an invoice. And then when we do that, we'll be able to invoice in part. So the next step will be it asks you whether how much do you want to invoice. So you can invoice either by the remaining total of all lines. When they say remain total of all lines, you're gonna pull in all the lines and then percentage or amount manually and manually entry for each line, and then you could go ahead and create the invoice. So when you select the convert to invoice, you can now choose whether to invoice for a total of all estimated lines. So you could choose the option that will select all lines and invoice the person 100%, where all the lines are invoiced at 100% of the estimate, a percentage of each line. So you could do a percentage of each line where all the lines are invoiced at the specific percentage of the estimate, or a custom amount for each line where all lines appear at zero but an editable separate but are editable separately, so you can edit each line separately. For example, so if a customer agreed to pay 30% to cover initial expenses, you would enter 30% as the as of each line value, and QuickBooks will show the value to be invoiced. Then select Create Invoice. So here we see that they said the percentage is 30%, which equates to $900. So you don't ever have to worry about the calculation because QuickBooks will go in and do the calculation for you. Everyone follow so far?
Yes.
Yeah.
Okay. And then the next step is QuickBooks shows that the total for each line at the invoice point. So the invoice is ready to be sent. But even at this point, even though I have like 30% each, suppose you wanted to change this, you could still go in and make a change to the um, invoice at this stage to if something changed or if you want to adjust something. So now, and then the change will be reflected on the invoice and the estimate. So the balance will show on the estimate. So this is saying that now you're ready to send that invoice. And then what you can see now is that on the estimate itself, so QuickBooks created the estimate. We had an estimate that we used to invoice this customer, and it shows you now that the total amount is here. How much you invoice of that amount is shown on the invoice, and then the remaining amount. So this is the balance that you have to bill the customer, and then it gives you a total at the end. So if you go back to the estimate after invoicing the customer for part of it, you'll see that there are no there are now columns showing that the total amount, the amount that has been invoiced, and the amount that is remaining, right? And then if you want to add taxes, you just select these as well. But right now, that's it. That's the final step in creating that progress invoice. So if we go down now, we will see the total estimate cost, right? So it has the normal information on the estimate. So if we go now to this gentleman, so what we like to do is add in some. Another way to create an invoice from an estimate is to start with the invoice. After creating and closing the estimate, enter the customer name in the new invoice to open a panel with their estimates. Select the estimate to add to the invoice, and you can charge the total, a percentage or a custom amount for each line. So in this case, if we look at that, let me see if I can pull it up. So what I will do is that I'll make the I'll make the I'll make the buttons available as well. So at the bottom you'll see sample company Craig, design and landscaping, and then the QuickBooks Online Classroom that you can go to as well. Sorry. Push even. Okay. Right. So once we have that set up, so the buttons appear at the bottom if you wanted to go to look at the Craig Design and Landscaping. Are open in an incognito window. So all you have to do is right click on it and then it select open in incognito window and it will open. So what I'm doing now is that I'm going to share with you the tab for the Craig Design and Landscaping. Is my internet good or is sticking?
It seems to be fine.
Oh, okay. I thought that it was sticking. So within Craig Design and Landscaping, what you were saying just now is in the note. They told you that you could like under the sample company you could create an invoice. So what we could have done is that we could have created go to here to create invoice, and then when the invoice window comes up, when the invoice form comes up, we will have an option where if we select a particular customer that has an estimate on the side bar, information will come up for that particular customer. And what we can do then is select the estimate and then we can do the same thing here. So that is what they're saying when they talk about the other way to do it. So one way you can do it is using an estimate, pull up the customer estimate and convert to invoice. And there's another way you could open the invoice first. And once the customer has an estimate, so this is where I talk about that in the window that comes up for the particular client or whatever the case may be that you select. There may be information that you can pull in the open drawer that will be waiting for them to amounts waiting to be invoiced for a particular client. So you can do it there. What I was trying to do was not go to the invoice, but I was trying to see if we have an estimate so that I can show you how it would look. And then we can move on to the next note. So it's just going to the sales center. I don't you realize that some things have changed with the layout of the QuickBooks. You find?
I didn't hear you, Troy.
Have you found that some things have changed? The layout has changed for the QuickBooks?
You mean any sample company?
Yeah,
Oh, I haven't been in any sample company recently, so I'm not sure.
okay, right. So it just looks a little bit, they have some windows at the side you can see with the dashboard, but these similar things are there like overview, sales transactions, so the things are there that you would usually see invoice reoccurring. So instead of having it at the top now, they have it to the side here so that you can view them. So I just wanted to quickly look at that and show you that do I have any open unbilled invoices? There are no estimates, sorry. So I don't have any estimates, then I will have to go and create an estimate for a customer to show you quickly. But that is how you would do it. Amy, so I just doing a quick one for you. And the expiry date will be in 30 days. So I just wanted to show you that from this estimate now, we have the 101 estimate. And then we could convert to invoice here. But I want to close the estimate now. And I want to go here now. So estimate should come up showing that there is one. So if I go to create an invoice and I select Amy, you should see that there is an estimate that is there. Let me see.
Troy, I am seeing here invoice, edit, email, pay bill, PDF bill. I don't think I'm seeing what you're saying.
Oh, you're not seeing? You're seeing the tab now?
Yes.
Right. So you see that after entering the estimate is here. The
Yeah,
estimate
I see that.
101001 that I just created. So that is what
Oh,
this note was saying, that you can do that and then you can add it to this invoice. So you can either add it in its entirety or you could bill for one and leave one. So if I bill for one instead of two, and save, let's see. So let me just come out of that and then let's see if Amy has, well, that is the note there where it highlights that option where you can change. So you can go ahead and practice that as well. Let me go back to, so this is where the note talks about that sharing. So when creating an invoice for the customer QuickBooks account, for the already invoiced amount, allowing the client to invoice and the remaining estimate. So how do you adjust now progress invoicing? So progress invoicing offers a lot of flexibility. Let's move on to the second task, which is adjusting progress invoicing. So one, so to increasing individual invoice lines. Everybody can see my screen, or it's a bit too small. To increase the invoice amount in one or more line of an invoice based on an estimate, select the due column on the line. So you select this column here, due, of the invoice you want to change, and this column shows the percentage or amount related to the line item and overwrites the percentage or amount to be invoiced. So say that you had invoice at the top, you had invoice 30% here, but you wanted to change that from the 30% to the 50% in this example. So you go into this juice section here and you make this change there, right? And once you make the change there, it will overwrite on the estimate as well, so that the change that you made will be reflected in the estimate. So if you want to increase the total amount of an estimate, so this is on the other side now. So you estimated the cost for a job, the cost is actually more now. So there are two ways to increase the total amount of an estimate. You can add a line to the estimate or change the total amount. So create a new estimate for the extra amount and make a new progress invoice out of it. So there are two ways that you could do. Add a line to the estimate or change the total within the estimate, or you could create a new estimate and send to the customer. Whichever one you prefer, right? And then you can delete. So deleting a line on a progress invoice. So to delete a line on a progress invoice, select the three dots on the right side of the line and select delete. From the pop-up, select delete line, and this removes the line from the invoice and puts the amount back on the estimate. Do not choose on link and delete from the pop-up. This removes all the lines of the estimate for the invoice. If you want to invoice from the estimate, you will have to add the estimate from a panel on the right again. So you don't select the on link and delete, you only select delete line. Because once you select that, it's gonna unlink it, and then you wouldn't have any connection more with your estimate anymore. So what it's speaking about is the line here, is this line here. So if you delete that link, that's what it means. So if you delete everything and unlink it, then it wouldn't show the progress billing. So it's good to keep the link there because that shows that it's linked to the estimate, right? The next thing is adding an estimate summary. So to add a summary to estimates, go to the General Settings gear and select Custom Form Style. So you're going to the Form Styles now. So within the Form Styles, there's an option down here. You should now see the estimate number and the amount, invoice previously created, and the current invoice, and the total amount invoice. So once you select estimate summary, it's going to show the customer now the invoice number, even the full estimate amount, the invoice amount, this invoice, and then the total invoice. So it's going to give them a little bit more information at the bottom so that when you send that invoice out to the customer or client, they will have all the information that they need and be able to follow the estimate and see what's happening. So you display discounts and you display estimate summaries, right? So all of this is in the content one. Everyone follow so far? Not going too fast.
Yeah, I'm following.
Okay. So now we come to the final stage, which is the progress reporting on progress invoicing. So the final task is to report on progress invoices, the estimate and progress invoice summary by customer report gives clients a complete list of all estimates and connected progress invoices simply. It tracks how much of an estimate has been invoiced to date and how much remains to be invoiced and whether there are any balances left for the customer to pay, right? So this is how the estimate will look. So we tell them what's the amount, if there's any balance, the invoice amount, the invoice percentage, and the remaining amount that is due. So this is clearly stating for the client, what information they what they owe you, right? And then they have reports and performance center there. So once we've done that, we're gonna check your understanding now. So we've almost reached the end. So the question is, what are the benefits that progress invoicing helps to deliver? Select all the options that you think apply. Does it track progress of the job, create consistent cash flow, create estimates for multiple jobs, recognize income throughout the job? What are the benefits?
All of them?
Might not be all of them. You could track progress of the job,
Right. 1, 3, and 4.
So everything except number 2 then.
create consistent cash flow. I don't know. Creating estimates for multiple jobs. Does it allow you to, what are the benefits of progress invoicing? All right, let's see if we are wrong. I think that one was wrong, yeah. Yeah, that's not quite right. So what it does is that it does the two. So in fact, progress invoicing can help to track the progress of jobs, create consistent cash flow. Progress invoicing can help to track the progress of the job, creating consistent cash flow and recognizing income throughout the job. However, it doesn't create estimates across multiple jobs. So it's actually 1, 2, and 3. See? So if a short answer is actually 1, 2, and 3. So it does create consistent cash flows. So you're able to match back, your estimates with your thing and see how the cash flow is going to be over the period. So to sum up, you're done, implementing here. So select each card to find out more. So choose the increment that will be charged. You have the option to charge as the bookkeeper or the client a total of all estimated lines, a percentage of each line, or the custom amount for each line. The second thing it does is that it helps the estimate keeps track of your progress. So if you go back to the estimate after invoicing the customer for part of it, you'll see that there are now columns showing that the amount that's been invoiced, and the amount remaining. So progress invoicing is flexible, and we see that it's flexible because after progress invoicing has started on a job, you can go back and change individual invoice lines amounts by overwriting the percentage or amount to be invoiced, increase the total amount of an estimate, and deleting a line on a progress invoice. So these are things that you can do, and we can make a note of those as well. So we move on to the next task now. So setting price rules. So this time, in terms of price rules now, setting price rules. In terms of setting up price rules, we see that price rules in QuickBooks enable clients to adjust the price of their products and services to their customers, either indefinitely or for a specific amount of time. They can offer discounts or charge different rates by item and use price rules to offer special rates to selected customers. So you know around this time the Prime Minister will sometimes give a VAT break or whatever. So this is something that you could implement if you want to give a special price for December. You know, instead of going in and changing all of the prices, you have a tool in QuickBooks now that will help you to change the price on specific items so that those items alone will have the change, or all the prices will have a change, and then it will automatically last for until December or until the 21st, and then switch back to normal pricing. So that is great too, right? So introducing price rules. Sometimes clients want to offer discounts on selected products or services, and they may also want to give certain customers a lower price. Those clients on QuickBooks Plus and Advanced plans can do this by setting up a custom price rule. So when my clients use price rules, sorry, let me go down here. So let's take a look at a few examples. So a client who sells both directly to consumers and to other businesses could use price rules to set up wholesale versus retail. And I was with the bedding company before. We had the pricing set up in the QuickBooks desktop version as well, where we would have wholesale pricing and retail pricing. So this is for persons who sell to not only customers or clients, but other businesses as well. So you can have one price when you enter. The thing is that when you enter the price, you enter the price for customer, and then it gives you an option to enter at the same time the price for retails, so that then you have the prices side by side as you enter them. A client could offer a promotion on certain items for a fixed period, such as a back to school sale or Christmas sale. A client could discount slow moving stock for an infinite period. A client could offer discount to particular groups like students or seniors or members of bar, organizations or nonprofits, or friends and family discounts. Okay? How can clients use price rules to adjust their prices? So the price rule feature enables price to be adjusted in one of three ways. So remember this, because they usually tax you in this area. The percentage, this increase or decrease the sale price by a specific percentage for a particular customer type or sale. Excuse me. Excuse me. Which could also apply to discount programs, fixed amounts. So this enables clients to give a specific dollar discount, such as $1 off, $100 off, $1, $2, whatever off new installations during January. So the custom price per item. So then you can have the custom price per item. And this option allows you now to enable specific item pricing that isn't a percentage or a fixed amount or discount for selected customers, maybe to offer a sale price or certain goods. So these are two ways that you could do it. I guess you could think of anything other ways, or that's it. The list has been exhausted. Okay, so overview of tasks. So let's look at it. Creating pricing rule. So explore the workflow for creating price rules. The first step is to turn the price rule feature on. Next set up the rules, then assign customers to them. So first you need to turn on the pricing rule feature if it isn't on already. Set up the rule and then assign it to the particular customers. Invoicing or price rule. So when a price rule has been created, it shows up on the invoice as an option that can be applied. So you still have the option to either add the discount or not to add it. Okay, and that is good because you may not want a rule set up and then it's forgotten, and then every time you do an invoice in the future, it has the price rule on it. So that is a good thing that it is only activated or used when you apply it. So if you don't apply it, then it doesn't affect the invoice amount, so you don't end up billing persons incorrectly, the incorrect amount. So creating price rules. Let's look at the first task and see how to create a price rule. You will follow an example for a client's goal tier customer. The rule will apply a 10% discount on all services. However, the discount won't apply to materials because the client needs to purchase these from a vendor and doesn't want to lower their profit margin. So this is a good thing. This will be like for persons who offer services, probably produce screens or whatever, have to purchase the item, the material, but they don't want the discount to be on the actual cost of the material, but on only to reflect on the service, 10% off. So in order to do this, first, we will start by turning on the price rule feature in QuickBooks. So to do this, you go to the settings icon. So we're in the settings section. You go to sales again, or we're looking at sales transactions. And then we turn on price rules here. So once we toggle it on and it turns green is on. And then from the sales tab, expand product and services. If it isn't expanded, expand the product and service. Switch on the price rules and then select save and done. Right? Save, click save here, and then done is right here. So once you do that, there are several ways to get to the price rule screen. So how do you go to the price rule screen? It pops up here. So you can click on create rule. You can go to the general settings here and select all lists and then price rules. Alternatively, select the more button from the product and service screen and choose price rules from there. So let's go and see if we can see where it is now based on what I have opened Craig Design and Landscaping. So let me go over to Craig Design and Landscaping. So firstly, we'll check to see if the price rules is on. You can still see my screen with Craig Design and Landscaping, right?
Yeah.
It's taking a little while to share. Alright, so once we've done that, step 3 is that enter a rule name. So this is how the rule screen looks. So creating a price rule. So remember it's the 10% we're doing. So we're going to decrease the percentage. We're going to use a percentage in this case. And it's going to decrease by 10%. No rounding. Or you can round it up or down if you want to get a whole number. Right? So this is if you get somewhere like 43 cents, 10 cents, or whatever, 11 cents. You want to round up to a whole number, you can. So once you enter the rule name, in this case, it's gold tier discount. So the rule name is gold tier. Select individual customers or all services, you see. So you can select an option from the customer drop down to assign a customer to the price rule. You can set the rule to apply to all customers or select customers individually if you have previously set up customer types. These will be listed here too. So it will be good when you set up the business for a client to say like, these are my retail customers, these are my wholesale customers, or these are my government customers, or these are my whatever type of business it is. And you could do this so that you can implement this price rules easily. Because when you enter the customer, you're going to enter them under a particular customer type, whether they are retail customers or your general customers or wholesale customers, or government customers or non-governmental customers or non-profit customers. So once you begin to categorize the groups, it makes this pricing easy and you don't have to go through each individual customer now and select them, right? And if there's family, you can select a group called family and friends and add your family and friends under that. So you can offer them a special price. See? So if you have previously set up customer types, these will be listed here to right. So in this example, select individually is chosen, and then the next in the products and service drop-down, select the type of product or service the price rule should apply to. In this case, it's all services, right? So we're going to select all services. So once we do that, you can select a percentage, but it's also, as they have said before, you can add a price rule by percentage, fixed amount, custom price. Remember that now is something that might be test. So doing price rules. And you could decrease or increase, right? So you see that you select the price adjustment method. For this example, the client wants to offer a 10% discount, so select percentage. In the next drop down, you can choose either increase by or decrease by. So that means here, increase by or decrease by here. Then for this example, it is a decrease. And in the next field, you put the percentage, so it's by 10%. So in the rounding drop down, you can choose increments to round or to leave it at no rounding, which is what the example does. So you leave it at no rounding here, but if you wanted to round it to the nearest dollar or round it to the nearest cents or whatever, you can. Next, you select the start date and end date if the price rule is for a limited period, or if the rule isn't time limited, leave this blank. As in this example, they didn't put any time period. So when you leave the time period out, that means it applies forever from the date that this price rule is set up going forward. If you put in a date, then it's limited to that time period. And once we finish that, I guess the next step is to click applied, obviously, apply rule. And then you select the add customer button and select the customer from the drop down that the price will apply to. When you're done, select apply rule and then save and close. So if we select John as the person, you can add a new customer, or you can add. So once you select them, they're going to be added to this rule. And then you have the services are highlighted here, so you can see that there's customer names that can be added on, well as service product or services that can be added. Any questions so far? Everything good?
seem to be okay.
Good. I know. Okay. So that is a good tool, a good thing to know. So you have some tools now that you could go and show off. Tell your boss you want to set some pricing for Christmas, discounts, But I guess some people may want to increase the price more than decrease it now. Set up and assign customer types. So the price rule can be assigned to all of the client's customer or specific types of groups of customer or even individual customers. To make it easy to assign price rules to a group of customers, customer types can be created. Right. So you could check out this support video, which I have the support videos and I have the notes in there of how to do it. But this actually comes with just show you steps on what to do. So if I was to go over to that when it comes up, it isn't per se a video, but it tells you the steps that you can take to set up a customer and to assign customer types and stuff. So it gives you details on how to create when it comes to select customer types and then select new customer type and then enter the name of the customer type and then click save. So it gives you that option. So if we look at invoicing with price rules now, let's move on to the second task and see what happens when a price rule is used on an invoice. The example of the client who wants to offer a select group of customers a gold tier discount of 10% off all services is continued here. The client now wants to invoice one of these gold tier customers. So you need to create an invoice using the plus new option, then invoice, and then select one of the gold tier customers from the customer drop down. So when the appropriate product service is selected, the adjusted price appears in the rate drop down. You can choose either the discount rate setup by the price rule or default sales rate. You can also overwrite the rate with a custom rate as well. So it allows you, so you see, after you go into the drop down now, it tells you you have gold tier discount or you can use the normal pricing. So you have the power now to change or to keep it as well, right? As I said earlier. So once the 90 is selected, you will see the subtotal and total is 90. And then that's how you would do it. Or you could select the default sales price of $100, right? So we've almost reached the end and we have the question here now is the price rule feature enables prices to be adjusted in one of three ways. What does each method do? Match the description to the adjustment method and then select submit. So what does percentage do? Enable clients to give a specific dollar discount, increase or decrease sales by a specific percentage for a particular customer type of sale, enable specific item pricing. So what does it do? Which one is for the percentage? Yeah, don't sleep.
Middle one?
So which one is the correct answer?
Molly.
Pardon me?
B.
B. How about fixed amount pricing?
B.
Which one is this? A, B, or C?
I don't know, try to choose that here.
I think that we should probably switch the two of these. That is where you might be getting the error, but we could see. I think this one might be, it might be this one, the specific dollar discount, and this one might be, it could be any of the two, but we'll see, right? If we round, we round. So you happy? Right, you see? So the price rule feature enables price to be adjusted in one of these three ways. Right, so we were right. Okay. So the fixed amount is enable clients to give a specific dollar discount. So you want the fixed amount is a specific dollar discount. That is the thing that gave it away, the dollar discount. The percentage is straightforward because increase or decrease by a percentage is included in the name. But these two is the one that is difficult. And for custom, you are doing it by enable specific item pricing. So it's not by any dollar discount or whatever. It could be either whatever you decide to give the person as, whether it's a item amount or a percentage or whatever. It allows you to do your specific pricing for that person, right? So to sum it all up, rules can be set up for different periods. Different price adjustments can be made, and different rules can be applied to different customers. So rules can be set up for different periods. So rules can be set up for specific periods of time, such as holiday sales, or can run indefinitely. Top tier customers always get a 10% discount. Different price adjustments can be made. So price can be adjusted in three ways: by a percentage change, by a fixed amount, such as $50, 10% off is the percentage, and by a specific item price. So they use the term again here, specific item price. For that one, a sales price on a certain good or service, right? And you can apply different rules to individual customers, and you can choose to set up customer types to group customers and then apply the rule to them. And there is our fifth one. Do you want to tackle the next one or you want to rest for tonight? Okay.
We can try one more.
Right, because they doing the tracking, and then next week we will tie up the customer section and we'll take a break. So next week will be our final session before we go into busy mode. So tracking customer prepayments. So many businesses ask for deposits or prepayments before committing to major pieces of work or contracts to supply services. And as bookkeepers, we too ask for either 50% of the cost up front when the customer signs for the work to be performed. Sometimes the norm is asked for 50%, but you could ask for less. if you want 20%, 25% of the amount or whatever, and then continue to do the work. So with QuickBooks, these customer prepayments can be recorded and then used against future payments, right? So we looked at the prepayments now. So prepayments will start at 8:14. I'm just making a note so that I can do timestamps on the notes when I do upload them. So on the prepayments now, if you look at that, an interior decorator makes a large purchase of supplies before starting a job. To cover this cost, they may ask their customers to pay a deposit up front. The customer is making a prepayment from their side. It could also be called a retainer, a deposit, or a down payment on earned revenue or similar. In this course, they are called prepayments, and that is money paid in advance of the service being performed or product being purchased. So let's look at what we're going to cover in this section. There are going to be 3 sections as well. We're going to look at deciding which method, using the deposit feature, and using the accounts receivable. So under deciding which method, we see that there are 3 methods for recording customer prepayments. Your first task is to decide which one is best for your clients. The next one is using the deposit feature. Switching on this feature adds a deposit field to invoices so that the amount of the customer prepayment can be included on an invoice and subtracted from the total to calculate the balance, right? Using accounts receivable, with this method, you first create a negative accounts receivable balance, and then later, when you create the invoice, you apply the negative balance to that invoice. So when you do a prepayment for the customer, their account becomes in negative because they paid you before the invoice is sent out. So when the invoice is sent out, it cancels out that payment. You can apply it to the prepayment that was made. So the invoice, you apply the prepayment, and then the invoice will have a balance. If it is a balance on the invoice, will show that the customer owes you more money. Or if the deposit is more than your initial invoice, then it will still show a credit minus the amount of the invoice, right? So using unearned income. So now you become familiar with a term called unearned income. So another way to track customer prepayments is to use an unearned income method. To do this, you first create a service item for the prepayment. Next, you create a sales receipt to record the prepayment, and then a credit memo for the amount of the prepayment you want to apply to each invoice. So in this method, you create the unearned. When you receive the payment, you apply the payment to an unearned income amount on the prepayments. And then when you issue a sales receipt to the person because the person is making a payment, so you give the customer or client a sales receipt. And a sales receipt, according to QuickBooks, is created when money is received at the point of sale, but no service has been offered. So this receipt will just say that is a prepayment that has been made. And then you have to create a credit memo then, because the credit memo will be applied to the invoice when you create the invoice later. So this is a lot more work than the other method. You think? You see? A lot more work.
There's a lot more steps.
Yes, a lot more steps. So this is when you use the unearned income method. But this method doesn't show it doesn't show a receivable underneath the customer, but you could set up the prepayment in a way that shows on your payables side as a prepayment because the prepayment is money that you don't own yet. You haven't earned it yet. So it's shown as a liability on your balance sheet. So you will have a prepayment account on your balance sheet in your liability section. So when the person pays, you put that money there on the unearned income. And then when you create the credit memo will then apply the credit to the person's account then. And then when you create the invoice, you apply the credit memo to the invoice. Wow, a lot. And then the credit memo would remove the prepaid amount, reduce the prepayment amount. So when you create this credit memo, it's going to move the amount from the prepayment account to your credit memo or sales or accounts receivables, right? I know it sounds very confusing, but some people may want you to show it there for accounting purposes because it is money that hasn't been earned as yet. So you will see your accountant sometimes not actually enter a credit memo, but what they will do is when they create the financials at the end of the year, they will transfer any money that hasn't been, any revenue or that hasn't been earned as yet to the prepaid section in the balance sheet. And that is how they would account for it there. And track on use prepayment. So create a customized report to keep track of your client's position regarding unused customer prepayments, right? And that is the final step, I believe, yes. Okay, soon finished. So deciding which method to use. So the three methods are the first task when tracking customer prepayments is to decide which method you want to use. You want to use the deposits. How does this method work? So the deposit feature in QuickBooks Online is enabled and a prepayment amount to be entered on the invoice. The body of the invoice lists the goods or services sold and the prepayment received is subtracted from it. Revenue is posted as of the date of the invoice, even though there likely hasn't been an exchange of goods or services. When should clients use this method? So this method is best when clients only receive prepayments occasionally. So you don't receive a prepayment every day, and they could also use it if there's a short time between receiving the prepayment and delivering the goods or services. However, there is a downside to this method, namely that it could be difficult to go back and find the prepayment as it doesn't show up on the customer records as a separate payment. And then the accounts receivable one, how does this one work? So with the accounts receivable method, the receive payment screen can be used to enter the prepayment without applying it to an invoice because the related invoice is not yet created. So the result is a negative accounts receivables pay balance. So when should the client use this one? So this option may work for jobs that will be finished quickly and within the same reporting period, and when the total prepayments are negligible. negligible. It may also be used for businesses that only use reports for management purposes rather than sending them to a third party. Additionally, this might be the easy method for clients who enter their own transactions rather than having their accountant pro do it. So you receive the payment and your receivables, you record it as a prepayment, and then when you invoice the person, which is in a short period of time, then it clears out. So this method isn't suitable if the client state requires sales tax to be collected on prepayment. So you wouldn't want to put it in though if you have to pay taxes on it. That is the only thing. And the unearned one is The income method tracks prepayments through a customer prepayments on earned income liability account. So this option is recommended for clients who need to provide financial statements to outside parties or for whom prepayments are normal course of business are a material amount and who are required to conform to general accounting accepted principles. So the gap, this method is required. So if you know that it's normal for you to receive prepayments, then you create this account. And this method especially suits clients with large prepayments held for an extended period of months. So this would be like for that contractor or whatever who might have a prepayment on their account long or for a large amount. So they need to produce this type of account. But if it's just a small amount, $300, $1,000, but based on your sales, it isn't a large amount, then you don't need to use it. Everyone follow?
Yeah.
I may have to just stop at the deposit method because these ones might be long. And then we could continue. But I will just do the deposit method, then I'll close off at like 8:30 or so. So to set it up, obviously you have to turn it on. So you go to your settings and then you look at sales again and you turn on deposits. In your deposits field. Then for this one, you create a new invoice and there's now a deposit field between, there's now your deposit amount, deposit field between the invoice total and the balance due. So there's now a deposit field there. Populate the invoice and in the deposit field, enter the amount of the prepayment. When a deposit is added to an invoice, QuickBooks shows a deposit to drop down, choose on deposited funds. QuickBooks calculates how much needs to be invoiced, taking into account the deposit. So you can receive the deposit from the person, and then there's going to be the deposit too. So you could choose whether you deposit it or is it on deposited funds, because then you would do the bank deposit when you're finished. Step 3 is that once you have saved the invoice, more actions become available. To see details of the transactions, select Transaction Journal. So you could select Transaction Journal to see more that what happened behind the scenes. But you see here that the deposit amount was here. You get the payment method. You could choose a reference if you wrote a receipt for the person, and then the undeposited amount. So if you want to see more, you could select the Transaction Journal. And then the final step is that the income is recorded based on the product and service entered on the invoice, and the prepayment is recorded in undeposited funds. Any remaining balance due on the invoice is recorded in the accounts receivables, right? So this is the client's accounts receivables now, and their accounts receivables will show the balance that is outstanding. All right. So I wouldn't go on to the accounts receivable method. I will end here. But just to do a recap, so tonight we covered like 3 things now, but we are good. We look at progress invoicing, we look at pricing rule, and we also look at prepayments and how to enter prepayments. I know if this is something that you don't really use, you have to really go over it again and learn it, but we're going to tackle it and go over it again next week and try to go through the other 2 so that we'll finish up the customer section. But
Okay.
it was good. Now you know how to use some more features. As you can see, this is more advanced from the normal sales and customer notes that we had before, but it's good. You're now in a different league. Are there any questions?
No.
No, please.
No, just so I'll try to upload the video for you so that you can go through it. It's on YouTube as well, so I guess I am going to start the video. I'm going to pull it up and I'm going to add it to the classroom. And you should get an email in your Gmail telling you that the note has been uploaded. So enjoy the rest of your evening. You know, I'll put up the assignments, more like an assignments that you can use along with the notes so that you could practice some of these things, right?
Okay,
So
thanks, Dr.
enjoy the
Angel.
rest of your night, rest of your weekend.
You too.
Have a good night.
You too. Bye bye.
Thanks.
Bye
See you.
bye.
Thanks.